Most people think that cash is safe. Cash is the least safe investment. It just doesn't have the same volatility to it.
What's up guys, Ben here and welcome to Motivation to Invest. With central banks from around the world printing trillions of dollars in stimulus packages and government debt at an all-time high, many fear that the government's printing of money will cause paper currency to be devalued. Billionaire Ray Dalio and the world's largest hedge fund manager also even went as far as saying that cash is trash. So what's the solution for investors? Well, during these uncertain times, many investors retreat to gold and silver to hedge their portfolio. Gold has also historically performed better in low interest environments, as it doesn't pay any interest on the investment. For example, during high interest environments, many investors will choose to put their money into bonds or even keep it in a high interest savings account. So with all this madness going on in the economy and the printing of money like crazy, gold has reached all-time highs, smashing through $2,000 per ounce. Bank of America and many large institutes have upgraded their gold buy point to $3,000 per ounce. And some analysts are even predicted gold will skyrocket to over $10,000 per ounce. So during this gold boom, many of you guys have commented on my previous videos and said, Ben, gold is increasing massively in price, but what about the gold and silver miners? Well, in this video, I'm going to reveal my top 5 gold and silver miners. Historically, gold miners have acted as a leveraged version of the physical gold. So for example, if gold increased by twice in price, the miners usually increase by a factor of 8. So that means a lot of these gold miners could be potential 10 baggers. But there are some risks also, and that's what we'll cover in this video. So let's dive in. Welcome back guys to Motivation to Invest. Before we get started, if you appreciate the hard work that goes into these videos, then please give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great investing videos for you guys. And if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. So how do you even value a gold mining company? Well, the price of gold is generally dependent upon supply and demand, and the price of the miners is dependent upon supply, demand, and cost. That is the cost of extraction, the cost of refinement of the gold. Thus, the most important metric which I'm going to mention in this video is the AISC, which is the all-in sustained cost. That's the cost of extraction, refinement of the gold. Each gold miner has a different baseline cost, and that of course affects its profitability depending upon the gold price. For example, if a gold miner had an all-in sustained cost of $1,000 and gold prices were at $2,000 like they are today, then the company makes $1,000 per ounce of gold in profit. The higher this baseline cost, the more risk the miner is, because should gold plummet in price, the business won't be making any money, and that's the major risk with investing into gold miners. However, should the price of gold increase, the miners usually increase by a leveraged factor of approximately 4. So if the gold price increases by 2, the miners could increase by up to 8 times in value, giving great returns to you guys. So with that being said, let's dive in to my top 5. Coming in at number 5 is Mont Gold Corp, the world's largest gold mining company. This is the world's largest gold producer with over 55 billions on its market cap and a 1.45% dividend. Now, many of these gold miners don't pay a dividend, but this is one of the best you'll find in the gold industry. If the gold price continues to skyrocket, it'd be right to assume that the company would possibly raise their dividend. I was actually invested into this company a few years back and made some healthy profits. Industry's best portfolio, 8 world-class assets, two emerging world assets, 60 million ounces of gold per year through to 2029, third most transparent company on the S&P 500. So this is a very stable, secure play if you're trying to get into the gold mining space. These are heavily diversified with a global presence across Africa, Australia, North America, and South America. Comment number 4 is Barrick Gold, the second largest gold producer in the entire world. This company has a $51 million market cap and over a 1% dividend. It also has a fairly decent all-in sustaining cost at less than $1,000. Anything below $1,000 is usually pretty good. These are a globally diversified mining giant. Right guys, so diving into the numbers for Barrick Gold. Now, I may have told you guys previously about the platform I use for stock research, Stockopedia. Very, very valuable. I've actually got an exclusive 25% off discount link if you guys want to check out this platform, if you want to use it yourself. I just use it personally to analyze stocks and I found it really helpful. So check that out. I'll leave a link below and see what you think. But here we are, Barrick Gold. Stock rank 82, momentum 89, quality 81, value 37. So this says the value's a little bit low at the moment. Looking at the share price, we're currently at around $29 per share. Now, if we go back to March sort of 2020, we can see it was around $20 a share. So it's gone up by around $9 a share. So it's still gone up by quite a significant amount. However, the reason I've got this graph up here is because I want you to see the previous prices that this stock has got to. And a lot of these gold mining stocks, just to show you the range that these go to. So here we are at over $52 per share back in 2008 during the financial crisis and then just after the financial crisis. So we're currently going through another one of those crisis periods. Could it get back up to around $52 per share? Who knows? But you can see if you were invested a bit further down here, around $16, you made nearly a four bagger over that period of time. So there's a lot of potential in these stocks. Another thing to take into account with mining stocks is to look at their debt level. Just so you know, should interest rates change, should gold prices drop, how that might affect the company. This company here, I can see it's got a current ratio of 3.27, which is fantastic. So generally I look for current ratio, which is your short-term debt to short-term cash flow. I look for around 2 and above. So 3.27 is fantastic. You got a price to book by 2.3 and P ratio 29.5. So yeah, that's just some details on this stock. Comment number 3 is Wheaton Precious Metals. Now this is a very different type of gold mining company in that it doesn't own any mines. It's called a streaming business. So basically, Wheaton Precious Metals has a business model in which they have a contract with the mines in an agreement to buy the gold and sell them on the open market. This is a globally diversified business with mines in both North and South America. Right guys, so diving into the numbers for Wheaton Precious Metals. So here we are back on Stockopedia. Share price today around $53 per share. March 2020, it was all the way down 25. So that's doubled in price within the past few months already. Let's look a few years back. So as you can see here, around 2008, 2011, around 45. So it seems at an all-time high from what I can see here. Whether that's a good sign or a bad sign, it's yet to be known. Does that mean it's at the top, or does that mean it's going to break through to greater highs following the share price of gold, which is at record highs? It's got a dividend of around just less than 1% dividend here, which is still good for a miner. Analyst consensus. So here we've got analysts from Credit Suisse, various other companies who have analysed the business. 4 holds, 6 buy, 1 a strong buy. So current ratio 1.48. Now that's not as good as I would like it, and it's not as good as the previous company I mentioned. So that's a slight risk there. P ratio very, very high, and price to book value very, very high. As you can see here, Wheaton Precious Metals, value through streaming. Not the same streaming as Netflix. Wheaton Precious Metals is one of the world's largest precious metal streaming companies. We offer investors cost predictability, direct leverage to increasing precious metal prices, and a high quality asset base. Comment number 2 is Bluestone Resources. Now, Bluestone Resources is a small cap stock and perfect if you want one of those high risk, high reward gold mining plays. What I love about Bluestone Resources is it has such a low all-in sustaining cost at around $579 per ounce. Thus, at today's gold price at around $2,000 per share, the company's making nearly $1,500 per ounce in profit. The company also has an approximate 8-year mine life, and analysts seem very bullish on this small cap company. However, be aware that small cap stocks with just one mine in one country are extremely risky, because if there is uncertain economic conditions in that specific country or political uncertainty, this can affect the share price massively. And last on my list, number 1 is Kinross Gold Corp. I actually love this company. It's a large cap trading at a 5-year high. It's a well-diversified business with mines in Russia, West Africa, and the Americas. The all-in sustaining cost is a little high at around $983 per ounce. Overall, history has shown that during times of economic uncertainty, people retreat to gold, and thus gold mining stocks face a major boom. They have a 1-to-4 ratio on average compared with the physical asset gold. Thus, you can achieve fantastic returns by investing into gold mining stocks. However, they do come with much more risk. So what have I been buying? Well, personally, I have around 5% of my portfolio in the physical gold. I invest in that using the iShares Physical Gold ETC, or Exchange Traded Commodity Fund. I'll leave a link for that below. I personally prefer the globally diversified large cap companies with low mining costs. But if you really want those high rewards, you could have a little bit of play money to invest into more of the speculative smaller cap mining stocks. A friend of mine actually invested into one of those companies a while back, and it turned into a 40 bagger. So that's £1,000 turns into £40,000 or $40,000. So they can give great returns, but there is a massive risk with them. Be sure to do your due diligence and do your research when looking into the smaller cap stocks. But for the big caps and the more diversified companies, you can sleep good at night as long as the gold price stays high. So which is your favorite gold mining stock, and do you think gold prices will continue going to the moon? Let me know in the comments below and I'll join in the discussion. And also, I've got a special treat for you guys. So if you guys would like a free share worth up to $200 or £200, then check out the link below I've got for the free trading platform Trading 212. When you sign up and deposit, you'll get that free share worth $200 or £200. You can use that to invest into one of the gold mining stocks I've mentioned on this video, or to invest into iShares Physical Gold ETC. But remember guys, this is not financial advice. If you enjoyed this video, I would really appreciate it if you give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. And if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.